A very good afternoon. You're watching Midcap Radar on CNBC-TV18. I'm Ekta Batra and with me is Sonal Bhutra. Well, it's turning out to be a day where we are seeing some amount of an intraday recovery as we speak. So we're off around 100 odd points plus for the Midcap index from the lows. So that's definitely a thumbs up and a positive. The Bank Nifty is also just about flattened out at this point in time. So a lot to discuss over the next 30 odd minutes.
That's right. So while we do that, first up, let's run you through all the headlines and then we'll discuss all the individual stories. Market trades flat with most sectoral indices in the red, but there is a substantial recovery from the lows. Mid-caps are lagging, PSU banks gain, while energy trades around the flat line. IT slides.
So when Life gets a boost as the first patient to receive its dementia drug in a clinical trial is randomized, Chairman and CEO Venkat Jasti tells CNBC-TV18 the drug trial will end in the first quarter of 2025 and the company has enough funds to research the molecule.
Our systems fires up as Blackstone is set to acquire majority stake in the tech and analytics firm for over 2,900 crore rupees. The private equity giant also aims to delist our systems. CEO Satinder Singh Rekhi tells CNBC-TV18 promoters will continue to be involved in the business.
Paytm plunges in early trade as SoftBank likely offloads 25% stake in the company. Sources tell CNBC-TV18 that hedge funds and long-only funds bought majority of the SoftBank shares.
Healthcare Global hits a fresh 52-week high on multiple block deals and positive analyst commentary. All right, those are the top headlines. Well, there is a substantial recovery from the lows. The Nifty is down around 13 odd points and banking names, they are the ones which are leading to this recovery. So we have the likes of SBI, ICICI Bank and Axis Bank. All three stocks, they are at the day's high. And apart from that, if we look at something like Reliance Industries, that is another big name which is pushing the Nifty higher today. So let's see whether this recovery sustains or not. We will see that especially in the last 1 hour of trade today. But on this show, it's all about mid-caps, right? So in our segment, Mid-Cap Movers, we have Vivek to take us through the mid-caps that are moving around in trade. Hey, Vivek.
Hi. So quite a few names on our list. Some of them, while you've seen a little bit of a cool-off, most of the stocks today that we are tracking are at a fresh 52-week high. Engineers India today, Godfrey Phillips, after a very strong set of results, continues its upmove and today has once again touched the 52-week high. JB Chemical and Raymond, after multiple analyst meets, continues its upmove and today at a fresh 52-week high. Some of the stocks that we're tracking in terms of seeing very high volumes in the session today. First up, it's HCC, continues its upmove for the second straight session. Stock is up almost 13 to 14% in just the last 3 trading sessions. You mentioned Healthcare Global, after multiple block deals today, stocks saw a very sharp recovery and today trading near the high point of the day. Rossel India is another stock. It's been very volatile in the last few trading sessions. However, in the last week or so, the stock has gone up over 25%. On the other hand, some of the other stocks that we're tracking that are seeing quite a bit of a sell-off on large volumes. Nazara Tech, while other stocks have seen an intraday recovery, this stock is yet to see one. Info Edge, after the sharp up move post the results, has seen selling for the consecutive session. And also Blue Star today has seen selling pressure on strong volumes.
Okay. All right, Vivek, thanks very much for bringing us a whole host of stocks which are buzzing in the broader markets this afternoon. Ashish Kyal of Wave Strategies now joins in to discuss the technicals of the market. Ashish, hi, welcome to the show. If you could just start by detailing which are the stocks that you probably like. There's been a bit of an intraday recovery that we've seen for our markets, though, it is a quiet day. What would you strategize in terms of stocks?
Hi, afternoon to you and all the viewers. We can clearly make out that over past 2 days, the index Nifty has been trying to digest the gains of past week where it was up by 300 gap up points, and it's just trying to digest that over past 2 or 3 days. But the overall trend remains bullish. I think any dips even on the index and stocks can be utilized as a buying opportunity as long as the levels of around 18,250 remains intact on Nifty. From individual stock perspective, the first stock pick is going to be Tata Consumers. We can clearly see after a long time there has been a very strong breakout happening today with a good volume pickup, and the stock is already trading around 780, 785 levels. And there is a possibility this breakout can continue and the stock can move towards the level of 845 on the upside. That's a very good target that we are getting, which is near the previous high. And the stop loss has to be maintained at 760 on the downside. The next stock on the buy side is going to be Bharat Forge. It's a very strong trend on the upside towards that 880 levels, 890 from where it corrected on the downside. retraced somewhere around 38.2% of this entire rise and finding some support around that 20 days average. So there is a possibility we might start the fifth wave on the upside in this stock, taking it towards the level of 905. So long positions can be created in Bharat Forge at current levels for the target of 905, and stop loss can be maintained at 810.
All right, Ashish, thank you so much for joining us and taking us through your technical picks and outlook on the market as well. With that, we'll do one thing. We'll slip into a short break now. We'll get to our special segment, Midcap Spotlight, and some stock-specific action as well. Stay tuned. Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Important flashes for you at the bottom of your screen. Ekta, some reports on pharma marketing practices. What is?
Well, yes, you know, there is possibly going to be a government report which is going to be put out on the Uniform Code of Pharma Marketing Practices. Remember, there is already a voluntary code of marketing practices for the Indian pharma industry, which is in place since 2014-2015. So now there could be a fresh code which could be undertaken. That's a CNBC-TV18 exclusive for you, where it could cover pharmaceutical companies, hospitals, diagnostic labs, and it is going to look to fixed responsibilities and have some amount of provisions attached. So let's see what the legal ramifications could be. But generally, it is already quite strict in terms of the kind of marketing which pharmaceutical companies are allowed when it comes to prescription drugs especially. And hence, let's see what the new uniform code might reveal. It could probably talk about, you know, what is actually allowed in terms of doctor relationships with pharmaceutical companies, and what they probably throw up for diagnostic labs, since they've been in focus post-COVID-19, would also be something that the street would watch out for separately, even for hospitals. But that's the update coming in. It's a CNBC-TV18 exclusive, and we'll get you a clear report on that story soon enough. But we have our Midcap Spotlight now.
Yes, and it's an interesting stock, Ekta, because that stock is up 18% in trade. It's about Timken India. Sonia is joining us to telling us what's happening here, Sonia.
Well, thanks a lot for that. So, you know, it's not just up 18% right now. It's up almost 64% in 2022. Now, for the uninformed viewer, this is a company that manufactures ball and roll bearings. It's used across industries, and the company is now looking to enhance its manufacturing capacity. So what they're doing is they're setting up a facility to manufacture spherical roller bearings and cylindrical roller bearings that will be used across industries, including in autos. The new facility will have a 600 crore investment, and this investment will be made through internal accruals. Now, what they're doing with this is they're targeting domestic as well as international markets, including markets like the US as well as Europe. I just went back to see the numbers as well. It was a very good first half of the year for Timken India. The revenues went up 36% year on year. The profits went up 60%. And this new facility and new capex that they're putting on board is something that the street likes with both hands. Back to you.
Okay, all right, Sonia, thanks very much for that. So that's Timken. That stock is up around 19%. So a lot of specific stocks which are in focus. In fact, a stock under pressure as a pre-IPO investor has sold a large chunk as soon as the lock-in period ended is Paytm. Nisha Podar gets us exclusive details of this large trade.
It's a large investor, SoftBank, which has sold down 25% of its total holding in Paytm, is what we gather from sources with direct knowledge in the early morning trade that we saw as soon as the pre-IPO investors lock-in has really terminated for the investors of Paytm. So about 4.9% stake sold for 1,800 odd crore rupees at average price of about 555 to 560 rupees per share. Now, few things to look at. 830 rupees per share is the price at which Paytm had bought these shares, so it's a substantial loss at which it's selling. And SoftBank now continues to hold about 13% stake in Paytm, for which it has a lock-in of about 60 odd days as per the SEBI norms. Now, in terms of the buyers of this particular share, Norges Bank, Siganti, Millennium, LMR and Gizalo. These are the 5 top investors which have bought majority of the book that was on offer for sale, and we do gather these long-only crossover kind of funds are really seeing the interest in this particular company, because remember, the company listed 1 year back at a $20 billion valuation, and now the shares have been offered at $4 billion valuation. So they see an upside going on from here. That's what sources with direct knowledge have been sharing with me. Of course, the amount of confidence in VSS as the promoter of the company is something that investors will look to bet on from here on.
All right, Nisha, thank you so much for joining us with important details on Paytm. The other stock on our radar is Exide Industries. The rally continues here. The stock has surged 25% over the last 6 months and has gained some further ground today as well. Some details on its lithium-ion manufacturing foray during a conference call. Sonia, tell us more here.
Oh, absolutely. And it was a detailed conference call where they spoke about their foray into lithium-ion manufacturing and the huge potential that they see there. Phase 1 of their lithium-ion cell plant will start by the second half of FY25, and the management expects the production to stabilize in FY26. The first phase will require a capex of 4,000 crores, and post that there'll be a capex of an incremental spend of 2,000 crores. Now, what's important is they reached out to several OEMs, several of their legacy customers, and they got a very strong response for lithium-ion batteries. Next Charge unit is already supplying EV batteries to buses, four-wheelers, two-wheelers. So they're getting into EVs in a big way, and now they're putting fresh capex on board as well. The lead-acid business is also doing quite well, and the margins are improving. But remember, the stock has already rallied 25% in the last 6 months. So perhaps from here, the upside could be limited. But today, the stock is reacting on the back of the lithium-ion plans that they have going forward.
Quite a tongue twister there. Thanks, Sonia, for that. So that's Exide. That stock doing well as well. Need to take a short break, but more on the markets and stocks once we're back. Stay tuned.
Welcome back. Well, as we've been telling you, a lot of stock-specific action that we are watching out for. And Suvain Life, that is the one which is surging in trade today. The company has made an announcement with respect to randomization of the first patient in phase 3 global trials for dementia drug. Ekta, tell us more about that. And we spoke to the management, so he also told us much more about this one.
Well, yes, you know, this is interesting because basically Suvain Life is an R&D company. They have many molecules which they are studying for different diseases. Now, SUVN502 is basically a molecule which is under study in their entire portfolio of drugs. And it was studied earlier for Alzheimer's, but it did not make the endpoint. That means that it wasn't successful. But then they took the molecule and started studying it for agitation as well as aggression in patients who have Alzheimer's and dementia. So basically, this is what is taking place, where the global phase 3 clinical trials are underway or have begun for this particular molecule. Now, phase 2, which is basically, you know, it would have said whether or not it is safe or not. They've actually skipped that part. So they've gone straight to phase 3 trials for this, and they've inducted the first patient for this particular phase 3 trial. So that is the piece of news which has come through for Suvain Life, and that's the reason why you're seeing the stock up 8.5%. Now remember that the top line data is expected to be available only by early 2025. But maybe the street is hopeful that this particular phase 3 trial will be successful, considering that the Alzheimer's, that while it didn't make it through for Alzheimer's, it could make it through for, you know, agitation in Alzheimer patients who have dementia. Out-licensing, would it be an opportunity? Likely not at this point in time, considering that it is more difficult for central nervous system molecules such as these to get out-licensed without significant data. So that might be ruled out. They will probably spend around $35 million, and they are well funded to spend it.
Okay, so that is about Suvain Life Sciences, up 8.5%. We're talking about another gainer now in trade, R Systems, that is up over 15% after Blackstone has bought majority stake in the company for 2,904 crore rupees. Let's get in Rima, who will join in with all those details.
Thanks so much for that. So Blackstone, the PE firm, has acquired the promoter holding in R Systems. The promoters hold about a 52% stake, and that has been acquired by Blackstone, which means that Blackstone is now the promoter of R Systems with a 52% stake. But the company Blackstone wants to delist the company, which is why they are making an open offer to acquire the balance 48% stake. that will be done at a base price of 246 rupees. So Blackstone wants to get that 100% stake and delist the company, but the minimum that they require is a 90%. But currently, the stock market, the current market price of our systems is higher than the base price which has been offered by Blackstone for delisting, which is 246. Now, successful delisting of our system pretty much boils down to one investor, and that is Bhavuk Tripathi. So Bhavuk Tripathi is an investor. He has about a 35.5% stake in the company, plus he has some investments via his portfolio companies. So on the whole, he has about 37% stake out of the 48% that Blackstone wants to acquire, and his holding now stands at 1,200 rupees per share. Perhaps what the market is sussing out that this delisting is not going to be successful at the current price that the promoters want, and the actual discovered price through that whole process will be significantly higher, maybe like we saw in the case of Linde India. Now, our systems is a product engineering company, something similar to, say, a Persistent, but of course much smaller in size. Now, our systems has done well as a stock price. The last 3-year returns, excluding today's gains, right, just till yesterday was about 350%. The 5-year returns till yesterday were 463%. Another, so Blackstone is big on IT in India. They have various, investments in unlisted companies, but in the listed space, they have an investment in Emphasis. But our systems is a much smaller company. It's a product company, while Emphasis is an IT services company. And when we quiz the management that, do you think Blackstone would be interested in perhaps, trying to get some synergies by merging the two, the indication seems that unlikely. But where our systems can benefit perhaps is that they could get business, or they could get orders from many of the Blackstone portfolio companies like Emphasis does. So that could be a synergy play that Blackstone and our systems together can work out. Back to you.
Okay, all right, Reema. Thanks very much for that. That's our systems, one of the biggest mid-cap movers today. But let's move on to an important piece of news that we just covered a couple of minutes back. Sources say new regulations covering the pharma industry marketing practices may be on the cards. Timsy joins in with the exclusive details on this story. Timsy.
Well, to ensure ethical pharma marketing practices are strictly followed by hospitals, doctors, pharma companies, path labs, and other medical practitioners, the 5-member-led panel under Dr. V.K. Paul is likely to submit its final report within a month. Sources have told CNBC-TV18 that the panel on Uniform Code of Pharma Marketing Practices is likely to propose a new regulation to ensure that ethical marketing practices are bound legally, and they should be fixing responsibilities. The new proposed regulation is also likely to have penal provisions and could also, in certain specific cases, allow for termination of license. Under the proposed regulation, it will be duty of pharma companies, medical practitioners to strictly follow ethical marketing practices and not indulge in bribery and freebies to promote sales. The panel is of a view that strict regulations are necessary, is violated, and none of the stakeholders are following the ethics prescribed under the Indian Medical Council Act of 1956. So let's see how soon the report is out and what does it finally have to say on the marketing norms. But yes, as of now, they're on the cards and they're likely to be very strict. Back to you.
Okay, all right, Tim C. Thank you so much for joining us with all those details. Well, that's a wrap on Midcap Radar. While we do that, we leave you with some important market opinion coming in from Tahir Badshah, who's the CIO Equities at Invesco Mutual Fund, to understand fundamentals of market and his sectoral outlook as well. Listen in.
Earnings expectations have actually perhaps not been kind of beaten in this particular quarter's earnings. I think we've just about managed to clear the finishing line, and probably we've seen a marginal upgrade as far as the large caps or the Nifty kind of earnings is concerned, probably helped by some of the larger banks, if at all. But broadly, the entire mid and small cap space, on an average, seems to have probably somewhat disappointed compared to what the expectations were at the start of the season. I think it's been a decent result season, but it's not necessarily led to a scenario where we would probably hope for significant upgrades from here on. Banks are still one place where probably you might still argue for a little bit of upside, and particularly maybe some upgrades in terms of earnings as well. Going forward, if let's say credit growth continues to maintain its momentum. There is, of course, on the other hand, the flip side is that we need to see deposit growth also catch up, and we need to probably focus more on the banks who can manage the overall liability situation, the liquidity situation much better than some others. So I think we need to make our choices within that space. But in general, I think that is one of the sectors where top line probably can still deliver some positive surprises. We saw some of that even evidenced in the last quarter's earnings. So I think that is still a sector where we can probably stay a lot more constructive.
Co-powered by Century Ply.